Alright, for this video here we want to go over a sample calculation of the earned income credit for the 2023 tax year. So in our scenario here we'll have John Q, taxpayer. He's filing as head of household and he has one child, and he's got some investment income which complicates his calculation a little bit, so we'll go into that in more detail. We also have the publication 596 for the earned income credit. And this is important because we'll need this publication to reference the tables to figure out how much of the credit we can actually claim. And then I've got one slide here covering some background on the EIC and then details on the fact pattern itself. So the earned income credit, or EIC for short, generally available to U.S. taxpayers. And it's available whether you have children or not, right? You can be a single filing taxpayer, let's say, with no children and still get the credit, but it generally benefits more often than not taxpayers with children, and so we'll see how that works when we take a look at the tables. Now, the amount of credit is going to depend on a couple of things. So you need to have some earned income during the year, so that's the first element. Your total adjusted gross income is also important because that is not only part of the calculation, but if your AGI exceeds certain thresholds, then you might not be eligible for the credit at all. The number of qualifying children you have certainly determines how much of the credit you can claim. And then what we'll also kind of highlight in this one is the investment income component. So the credit amount is calculated on your earned income and then your total AGI, right? And then the EIC amount is going to be the lesser of those two calculations. And that's important because the investment income obviously goes into your AGI calculation, but if your investment income is too high, then the credit is also completely disallowed. So we'll see how that works on the worksheet. So the IRS publication 596, again, it's very important, useful tool to figure out whether or not you qualify or not, all the other rules. But more importantly for this video, what we'll see is the actual tables where we look up those amounts. So in our example here, we've got John Q, taxpayer. Let's say he's a single filing taxpayer as single parent, and he's going to be filing as head of household, right? And so during the 2023 year, he has W-2 income of $42,500, and he has some interest income on his bank account of $309. So interest income is not earned income, right? It's investment income. Now he has one son, Alex, who's 8 years old, and the son lives with him for 12 months out of the year. So he lives with him the entire year there. Now if we have a look at the EIC tables, what we're going to see is we have to calculate an EIC amount on the earned income, which is going to be $645, and then an EIC calculation on the total AGI, which is going to be 597. And when you do both computations, you take the lesser of the two values, and so ultimately he's going to be able to claim 597. So if we have a look at the tax return, and we'll start going through this calculation here. So the first thing that's important to do here is the schedule EIC. So if you have a qualifying child that you're claiming for these purposes, you need to include the schedule EIC and attach it to your return. So the information here, pretty straightforward, right? If we look at line 1, we're starting with the name of the child's social security number, and then the year of birth. And as they've noted here in italics, if you have a child that's born after 2004 and the child is younger than you, right, you can skip lines 4A and 4B. So we're skipping 4A and B, and we're going to 5, and we can see the relationship here is it's his son, and he lived with they lived together for 12 months during the year, and they are in the United States, right? So this is also really important for you, that for those of you that might be U.S. expats living in a foreign country. Often you're not going to be able to claim this EITC amount. All right, so once the schedule EIC is completed, then we can start to look at the actual EIC worksheet. So if we look at John's page 1 of his return here, we've got his son claimed up there as a dependent, and we can see his income here. He's got the earned income up on lines 1 of $42,500, and then he has $309 of taxable interest income from that bank account. And so ultimately what we're trying to figure out is how much of that EIC or earned income credit he can claim. So the starting point here, after you do the return, as far as inputting your income, so your earned income, your investment income, you can pull this earned income credit worksheet. This is also available in the publication. And so starting point here is to figure out how much earned income you have. So on line 1, it's asking us to enter the amount from line 1Z. So 1Z on page 1 is the total of all those earned income amounts that could be entered. So you can see here we've got 1A for W-2 wages, 1B for household employee wages, and so on and so forth. The total amount, 1Z, is the $42,500. So you could be a taxpayer that has multiple line items completed here. If so, that's fine. You're just pulling the amount from 1Z when it comes to doing this worksheet. So $42,500. If you have any of these Medicare waiver payments that you're excluding, you would subtract that out. And then if you were self-employed and you had a Schedule C, you would complete line 4. But in our case for John, he has neither of those. So the total here is simply $42,500. Now, $42,500 is the earned income John has, and we'll use that to calculate the first amount of the potential credit. So if we have a look at the publication, if you scroll down to the earned income credit tables, what we're doing here is looking up the amount of income on these left-hand columns, and then you move from left to right based on whatever your filing status is and then how many qualifying children you have. So if you have 0 qualifying children, 1, 2, 3, or so on. So the amount of income we need to look up here is the $42,500 figure. So we're going to scroll on down here and we can see $42,500 is this line item right here, right? And then we have 1 qualifying child and we're filing as head of household. So if we have $42,500, we move across to the right hand side, and this column 1, you can see the $645 figure there. So $645 is the amount of EIC calculated on his earned income. So we enter $645 there. Now we have to continue the worksheet and calculate total AGI and the EIC amount on that AGI. So the amount of adjusted gross income from line 11 of his return, if we go back to page 1, scroll down to line 11, we can see $42,809. So we input 42809 and then complete questions 8 and 9. So question 8 is asking us, is line 7 less than either of these two values? So 9,800 if we do not have a qualifying child, or 21,600 if we have at least one. In our case, the answer is no, right? So line 7 is not less than any of those amounts. So we enter no, and then look up the amount on line 7 using those same EIC tables. So we have $42,809. If we go back to the table, 42,809 puts us within this range here, so 42,800 to 42,850, and then move across the right hand side again to column 1 where we see that $597 figure. So go back to the worksheet here, enter 597, and then line 9, it asks us if we checked yes on line 8, enter the amount from 6. If we check no on line 8, enter the smaller of line 6 or line 8. In this case, the smaller amount is going to be the $597 figure. So $597 is going to be the amount that we input on page 2 of the 1040. So if we go back to page 2, in the payments section here, you can see line 27, we have earned income credit amounts, and there's where we enter the $597. So the $597 is included in the payments. That effectively increases his tax refund for the year. And so that's how John completes this worksheet. So I hope that was helpful. If you have any questions, certainly feel free to leave a comment below. And I look forward to seeing you again on the next video. Thank you.